And this morning we are starting with an industry keynote by Mr. Ranjan Kant, co-founder of Earthmate Tech Private Limited. So let's put our hands together and let's welcome him on stage. A very warm welcome, Mr. Kant.
Thank you, ma'am.
So this morning we are ready to share with you the industry keynote. Please kindly share your thoughts with us.
Sure, thank you. Hello, everyone. Hi, thank you for coming this morning to this amazing startup Mahakumbh, and it's an amazing opportunity to talk about fintech in general and what my startup does as a part of that big community. So. I run a embedded fintech lending startup. We have been in the market for 2 years now. We have profitably disbursed over 2,000 crores of loans to more than 2 million customers, out of which 80% customers are MSMEs. So we essentially are a way for large banks and MSMEs to access individual and MSME segments digitally and seamlessly, which hitherto has been a real difficult proposition in India, right? So, how do I click? Sorry, next slide, please. Thank you. So just these are all large numbers. I'm sure most of you who track the fintech space are quite familiar with some of these. Let me point out some of the nuances of how the fintech industry is rapidly growing. The things to note is there has been massive funding in this sector. Unicorns is fine, but the key thing is the unicorns are across a variety of sectors, be it payments, be it credit cards. So it has not been limited to a particular innovation or a particular segment. They have been across the board, and which I think is very interesting in a growing democracy like ours. There is massive assets under management worth 80 lakh crores. And the interesting thing is that even the return on investment is on the higher side. It's just not a volumes game and small margin. Actually, there is money to be made if somebody builds a smart tech-led business model in this segment. And what is also, I think, the most enabling factor is our government's continuous support to the sector. For example, that I would count three which are upcoming, and I'm sure most of you would have heard of it. First is the account aggregator framework, which would allow lending players to access a lot of data from financial institutions like banks and even the GST network seamlessly and without a need to authenticate them. I'm sure most of us have uploaded our bank statement, which gets verified by an authenticator either online or offline, which is a tricky proposition. Account aggregator will solve all of that. Then Open Credit Enablement Network and ONDC, both of them together will I truly believe spur the small ticket size lending in this country. Moving on, next slide, please. Yeah. So there is a very interesting segment emerging in fintech itself called embedded fintech. What does embedded fintech mean? For example, an embedded fintech player is primarily a technology platform. They don't indulge in sales or ops like a fintech last mile company app like a PhonePe would do, right? They wouldn't go to the customer. They would build technology to enable fintech, and that's why it's called embedded fintech. The other amazing thing about embedded fintech is it also gets embedded with a lot of non-fintech apps. For example, let me take an example of Swiggy, right? Swiggy has multiple restaurant players, restaurants delivering food to their customers. A player can embed in the Swiggy app to offer loans to these restaurants. They don't need to go to the restaurants directly. Swiggy will manage the restaurants. The lending happens through this player. That's what an embedded fintech framework can do in our country. There are already a bunch of players doing it, including us, and I will talk through what we do to give a sense of what can an embedded fintech play mean. Next slide. So here is a problem we solved, right? So what has happened now is think how the fintech world has evolved over the past few years. There are massive number of fintech apps solving the customer skin problem, right? So they have provided a digital skin to the customers, which lead to great UI, great experience, ease of transaction, no documentation, everything happens online. All of that has happened. But even these apps struggle with two very basic, very basic tenets of lending, so as to say. First is risk management. They most likely don't have a proper risk team or a risk algo which can help them lend to their customer base. And second is access of capital. Even though they are fintechs, they might have raised money from venture capital, angel investors, but they still need a large base to lend out. And regulatorily, they are not allowed to lend, right? In India, lending can only be done by banks and NBFCs under regulation. So they need access to capital. And while a lot of these fintechs have mushroomed, they struggle with these two parameters. And that's where we sensed an opportunity to build think of a credit cloud, right? A setup which any large aggregator of customers and suppliers can take, integrate, and start lending to their customers or suppliers within 2 weeks. That's the proposition we set out with. So what do we provide to each of the partners that we have? For fintechs and new NBFCs, for digital platforms like Swiggy, PhonePe, or for SME anchors, traditional large anchors who either buy goods from SMEs or they distribute it through the SME channel. What can we provide as an embed fintech player to these players? Next slide, please. So this is what we have built as part of our journey, right? The heart of our startup is this element called credit exchange. Think of it as a stock exchange, but for debt, right? So what we do is, if you look at the left-hand side, there are all of these sourcing partners, lending fintechs, payment fintechs, digital B2B platforms, auto EV OEMs, SME anchors. All of these players integrate with me either through API or a UI, and they drop their customer data on my platform. For example, you go to one of these players' apps, there is a button called Get Credit here, you press the button, and the data comes to me. Once the data comes to me, what I have done is, I have my own NBFC, plus I have tied up with a bunch of banks and NBFCs as co-lenders. All of them together. So my credit exchange decides this borrower which has come on my platform, which is the most ideal lender for this borrower. Once that decision is made, all of this happens in real time on the tech platform without human intervention. The money gets disbursed to the borrower. So what have I done? All these players did not have lending access. I have created a lending cloud for them. They can come, tie up with my platform and start lending to their customers instantly. And in return, they get a fee out of it. So their customer base has been monetized, right? So if you see most of the startup pitches today, they would all tell you lending is their holy grail. This is what enables that lending to happen. So we are offering a platform as a service. Then we have multiple software products on the platform, like loan origination system, loan management system, bank statement analyzer. All of this goes as software as a service, and then I have a tie-up with the lending partners. So now I have a base of 2 million customers built over 2 years, who I started lending with them. I can cross-sell to them. I can sell insurance. I can sell investment products like mutual funds, FDs, all microbytes. So that is the kind of impact an embedded fintech play can have in India. There are great guys doing the last mile. There are guys having the balance sheet. An embedded fintech player can connect both of them. That is what we do. Next slide, please.
Just a moment.
Yeah.
May I ask a question?
Sure.
Now, you have told that you are having tie-up with banks.
Yes.
So you are selected which bank would be lending.
Yes.
So what about the appraisal by the bank?
Yes.
When the right of appraisal is with the bank, so
Sure.
is it that you decide who would the bank lend, or how does the appraisal happen?
Can you go back to the last slide, please? Sorry. So you see, there is something called a risk engine that we have on our platform. So let's, when I tie up with a bank, they have got what you call a BRE, business rules engine, which defines what kind of risk they want to take. For example, in certain segment, I would not do CIBIL less than 700. I would not give loans to these PIN codes. I would only do assessed income and not income tax return. I would only do income tax return based assessment, and I would not look at self-assessed, self-declared income, right? So all of these parameters are are formed as a part of credit policy, which I code into my risk engine. So when the loan comes to me, all those parameters are judged, and hence my credit exchange tells me this is the entity which would have the right risk policy to lend to this borrower. The loan goes to the platform, they approve it, and only then the lending happens.
Generally, when we talk about banks, the people through whom the banks lend, they are called DSAs. They also get some fee from the bank. So in your business model, you are also getting some fee from the bank.
Sir, very appropriate question. So if I would be a DSA, if only I had the pipe connecting them, right? So if I would only pass the application to the bank, and the bank was to judge that whether the lending will happen or not. The interesting feature I bring in the mix is I have my own NBFC, which co-lends with the bank. So banks put in 80%, I put 20% for every loan. So what happens is, now I am the person who can drive the contract. What that means is, from the people who supply loans to me, like I named Swiggy, for example, right? They drop data on my platform. My contract with them is based. The bank doesn't need to get into it. What will be the commission, everything, I deal with it. I deal with the bank. I tell the bank, we will do 80-20, your rate will be this, and the end rate will be this. And bank gives me their risk policy, and I code it into my platform. So that is why I have my own NBFC, to drive a decision behavior rather than just being a DSA.
Great. It's a great business model. So last small question. So are these banks private sector banks or PSU banks?
Again, sir, great question. My partners right now are PSU banks, sir, because PSU banks are locked with legacy infra with large balance sheets, right? And our tech helps them unlock that huge balance sheet which is there to lend. But they are just not able to use it for MSME and individual sectors because of their tech and the whole branch business they have built. Haan, sir.
Mr. Ranjan, I am Dr. Sandeep Malik.
Yes, sir.
We are into healthcare. And I just want to know whether this is for MSMEs only, or as I want to buy a house and I have to run around all the banks or 3-4 banks, and they exploit me for one reason or the other, and they spoil my time also. Are you a search engine kind of thing, or are you a for these kind of loans also?
Sir, thank you for the question. So we have a 200% team, sir, managing 2 million customers. So I can't run the search engine. Just to be very, I'm being very, and that's why my relationship with my partners work, because my partners know I am not in the customer origination play. It doesn't mean I will take away the customer ever. I just can't. I have 200 people. How am I going to manage 2 million customers, right? So the way it operates is we tie up with platforms like Basic Home Loans, who bring in the customer. I facilitate the lending. So I would not be in the front app business ever, if that was the question you were asking.
Mr. Ranjan, the thing is that you have named Swiggy 2 times. Swiggy is a marketplace for food. And I was just imagining that you have taken the name of Swiggy. You might be a marketplace, or you tend to be a marketplace for loans. Is it like that?
Sir, so the difference is the embedded part. The difference is that Swiggy as a marketplace is a B2C customer-facing marketplace.
Yeah.
I am a B2B marketplace.
Okay.
And I'm embedded. So Swiggy gets the customers, I facilitate lending to them. So I don't go out and fetch customers. That's the big difference between an embedded play and a direct fintech play.
So in case of B2B players, as I told you, we are into healthcare, and we serve many insurance companies for B2B health checkups. And we have a payment cycle of 3 to 6 months.
Yes, sir.
So
We can finance that. Yes.
Can you do that?
Yeah. So we are already working with a couple of with a company called Finzol, which finances insurance premium.
Okay.
So we are their backend engine.
So we are kind of invoice.
Yes. Invoice discounting.
Thank
I
you.
can do that.
Best of luck.
Thank you, sir. Okay. Shall we move on? Last slide. So so we won the AI Solution Provider Award yesterday, thanks to ICRA for that. In keeping with our AI roots, we have a large data science tech team. We are right now working with large language models in popular parlance ChatGPT to drive 3 outcomes. So you have seen a lot of news on ChatGPT, but it can be really amazing in the fintech sector. The 3 things we are doing, very simple things, right? So we have got 60 partners now. Now we have got experience on how, like sir said, he is a health health checkup financing engine, right? So now I have various kinds of partners who do various things. I am now able to drive a program wherein a new partner, my algorithm will ask 20 questions and they will figure out what is the best way to integrate with that partner. What will be the rate, what APIs you need to consume. So that's one ChatGPT project we are driving. The second one we are doing is, I get tons of documents. I look at Aadhaar, PAN statement, ITR, financial statement. All of these documents, given we are a large, huge country, it's in various shapes and forms, right? So we have developed OCR tech. Even when OCR happens, somebody has to look at the OCR result to say, yeah, this is PAN, this is a balance sheet, right? The computer can't do that. So we are training ChatGPT to actually do that for us, so that it can replace a bunch of people in our team to actually technologically do it in seconds. It can say this document is this document is this. That will be a big, big boost in any lending fintech operation. The third thing we are doing is, most of our partners, why they come to us is, if they go to a bank, they will struggle with the product creation. For example, take a EdTech loan. A parent wants to take a loan for their kids studying in a college. Now the EdTech company will say, when the admit card gets released, you will pay me a small fee. Creating that kind of product for a bank is hard. They are very small volume, right? But being my own platform, I can create that product. So I'm using ChatGPT to understand and create products now on my platform. And I think all of these three things together can be applied to the entire fintech industry, and it can be a real game changer for all of us. With that, I rest my case. Thank you.